Welcome back to another financial brief in under 3. Today, talking about S-corps. Let's first break down what an S-corp is. An S-corp is not a business entity, it's a tax filing status. If you elect to file as an S-corp, all the income, losses, deductions, and credits will pass through the corporation onto the shareholders. If you work for yourself and you're your only employee, then you're going to be the only shareholder. Everything will be taxed on that individual level, and you don't have to worry about double taxation like you would with a C-corp. The benefit to filing this way is everything that gets passed on to the shareholders is not subject to that 15.3% self-employment tax. Now, before you go passing all your profits onto yourself, you're going to have to pay yourself a reasonable salary first. Here's a list of some things to consider when you're determining what a good salary is to pay yourself, but a good rule of thumb is the 60-40 rule. Take 60% of your profits, pay that out as a salary, then the other 40% you could take as a distribution. That 60-40 rule can get you into trouble. You could also be leaving a lot of money on the table, so you're going to want to talk to your accountant before you determine what a good, reasonable salary is for you. So how much can filing as an S-corp save you in taxes? Let's look at someone making $150,000 in profit. They're going to have to pay self-employment tax on 92.35% of that, or roughly $138,000. That's going to put their self-employment tax at about $21,000. So why are we only paying self-employment tax on 92.35% of what we make? Well, normally the employer has to cover half of the self-employment tax, the employee pays the other half. If you're the same person, then you can take the portion that's paid by the employer and deduct it as an expense to the business. Self-employment tax is 15.3%. Half of that is 7.65. Take 100, subtract 7.65, and you have 92.35%, or what you owe self-employment tax on. Now let's look at filing as an S-corp. You're only going to pay self-employment tax on what you pay yourself. 60% of $150,000 is $90,000, leaving you a self-employment tax of $12,700. You are going to have to pay into federal unemployment, so that's 6% on the first $7,000 paid to each employee, but you're the only employee, so that's $420. That puts your total net tax payable at a little over $13,000, substantially less than what you would have paid if you filed as a sole proprietor. Filing as an S-corp may not only save you on self-employment taxes, but it also opens up a strategy to where we can get more money into your retirement account, reducing your tax bill even more. For more information, visit my website, thefinancialaviator.com, and schedule an appointment.